SMSF members can only have one accumulation account, but this restriction does not apply to pensions. Tim Miller has joined me to look at this aspect of a person's retirement phase. Welcome, Tim.
Hi, Darren. Thanks for having me.
Let's start by just establishing how many pensions is an individual actually allowed to have?
Well, as they say in the classics, how long's a piece of string, Darren? Ultimately, you can have as many pensions as you want. I suspect that your accountant or fund administrator would preference that you didn't have too many, but ultimately there's nothing to suggest that you can't start a pension, have other contributions come into the fund, start another pension. And so, you know, depending on how early you start the pension strategy, say transition to retirement, you may then still have another 5 or 6 or 7 years to retirement. So you're adding additional contributions. So, you know, let's just say it's not unreasonable to see a fund with 3, 4, 5 pensions already set up.
Okay, well, in that context, when should a person actually consider employing a multiple pension strategy?
Yeah, so, and again, that of course, that's a really different question to how many pensions can you have, is when should they look at having a multiple pension strategy. I think there's a number of issues to contemplate there. And for me, one of them is that the multiple pension strategy is largely about two things. The first thing is that it's about estate planning. So often you'll have multiple pension strategies because you've got multiple beneficiaries, and so therefore you want to find a simple way of being able to divide your benefits between those beneficiaries. And so by doing it by separate pensions is one way to achieve that goal. So a lot easier to identify for the surviving trustees as such. The second point would be that because pensions, because you can't make contributions or add rollovers to a pension, so therefore if you make additional contributions, and that might be downsizer contributions, it might be non-concessional contributions past age 67, subject to work test removals and things like that. So you may want to say, okay, well, I've now got this additional money in accumulation. I haven't used up the entirety of my personal transfer balance cap. So I haven't put $1.7 million in the current year into pension. So I've still got a gap there. So you say, okay, well, do I stop my existing pension, add that money back in, or do I just run it as separate pensions because one is fully taxable, one is tax-free? Do I do it that way? Plus also, when you commute a pension, you've got pro rata minimum requirements. So you've got this calculation requirement that if you stop one, you've got to do a whole heap of calculations for that, add the money in, and then you're basically putting that old capital in with new capital to calculate a new minimum for a pro rata period. So it does have its administrative issues to contemplate.
On that score, can you have too many pensions? And when could efficiencies start to arise, or inefficiencies, I should say, start to arise?
Look, I guess the answer to that is I think you can definitely have too many pensions. I think particularly if you are, let's say, using multiple pensions because you're making additional non-concessional contributions, and each year you start one and each pension is effectively 100% tax-free, then there's no real reason why you should continue those on as additional or separate pensions, because if you amalgamate all of those pensions together, they're still going to have the tax-free status. So then it's going to come back to that estate planning point that I raised before as being probably the primary reason to run multiple pensions. And so if you can ensure that you retain the integrity of the taxation breakdown, then ultimately I think you can get away with 2, maybe 3 pensions. But then it will all come back to how many beneficiaries do we want to pay when the member passes away.
Okay, so on a related question, if you do have multiple pensions, then when should you consider commuting one or more of them?
Yeah, so when becomes an interesting question, because when is both a timing specific one, but also a dollar value specific type one? Like, do you look to commute when you've built up sufficient enough balance inside your accumulation interest to start another pension and therefore stop your existing one to do the new one? So that's one side of it. But the other side of it is, when do you look to commute? Do you look to commute on the 30th of June or the 1st of July, or what sort of timing point of view do you look at from the commutation? And one of the key messages that I would always give in that sense is that the commutation the commutation and the commencement require two things. The commutation requires a pro rata minimum be paid. So if you're fully commuting your pension, and let me use a simple date of the 31st of December. If you fully commute your pension on the 31st of December, most people aren't thinking about doing that on New Year's Eve, but let's assume they do, then you've got to pay 6 months value of the pension before you stop it. Then you need to pay 6 months of your new pension, which will be calculated from 1 January or whatever the date is. So, 30 June, for example, is a great day to look at commuting the pension, because you've met your minimum pension obligation for the 365 or 366 days. 1 July, on the other hand, is a terrible day to commute pensions. Now, that might be a little bit opinionated there, but the reality is that for a good decade now, the tax office have had a single opinion on that: is if you commute your pension on the 1st of July, you have to pay 1 day's pension from that account-based pension. So it's an administrative nightmare for what is a few dollars of pension payments. So yeah, 1 July, avoid. 30 June is ideal. That's the Tim Miller book of pension commutations.
Okay, thanks for those insights, Tim.
No worries.
Tim will be providing more detail about these discussion points at the Self-Managed Super SMSF Professionals Day for 2022, and that's to be held on the 31st of May. If you want to register for the event or find out a little bit more about it, please reference the details you can see on screen now. Thanks again, Tim, and I look forward to your presentation at the Professionals Day in May.
Thanks, Darren. Always a pleasure talking to you.